And there you have it. That's the closing bell at the New York Stock Exchange. The Dow Jones took a significant dive early in the day, down around 800 points from Monday, but the numbers did bounce back late in the day, closing with the Dow down just around 67 points.
All right, the NASDAQ and S&P also had wild swings today. The S&P closed down about 1%. The NASDAQ dropped about 2%.
Scott Wren joins us now for more. He is the senior global market strategist at Wells Fargo Investment Institute. Scott, welcome. Thank you for being with us. So why are we seeing such a roller coaster with these numbers where it's down hundreds of points most of the day, then bounces back before the close?
Well, I think there's a couple of things going on, some of which is just the market has had such a spectacular run since March of 2020 without really much of a correction at all, that once we broke through, and this is kind of a trading thing, once we broke through that 200-day moving average on Friday, it set all kinds of trading stops off, and really traders jumped into this market selling, and that's really, in my opinion, that's really what's caused a lot of this volatility. It's longer-term buyers, which we think we want our investors in there buying, battling these short-term traders. And as you saw today, the S&P was briefly positive ahead of that 200-day moving average. The traders are in there selling ahead of it, and the market closed a little bit lower. But for the most part, the fear, of course, is we're still worried about inflation. Omicron has been a headwind for global growth. People are worried that the Fed is going to be too aggressive. And then, of course, the supply chain disruption just never seems to go away. So there's enough things out there for people to worry about that when you break through these big technical levels after a big positive run, people get nervous. And that's, I think, why the market's so jittery.
And speaking of the Fed, it's expected to announce a possible interest rate hike tomorrow. Which sectors do you think will be hit the hardest if the rates rise?
Well, for us, we're not looking for a hike tomorrow, but we're looking for a hike in March. We're looking for 4 hikes this year. So I think traditionally, at least right off the bat, if you had something that was that the market didn't expect, which would be a rate hike tomorrow, I think you'd see something like technology probably take it on the chin. I think that sector obviously is very sensitive to interest rates, and it makes up a huge portion, almost 30% of the market cap of the S&P 500. So in my mind, the initial hit would come there. But I think that surprise, and the surprise there is, oh, wow, is the Fed going to be too aggressive if they're hiking in February, where that's a little bit earlier than what they've been hinting? I think that would probably cause some downside in the market as well.
And so, sorry, go ahead.
No, I was going to say in general, I mean, the market, if the Fed hiked the rates tomorrow, I'd be shocked if we didn't have a pretty good down day tomorrow.
All right, looking at tech, the NASDAQ has dropped significantly this year so far, but a lot of major tech companies did really well in 2021. These companies are announcing their earnings this week. Still, a lot of market watchers do say that these companies are pretty fully valued at this point. So what effect are those numbers going to have on the NASDAQ, do you think?
Well, stocks aren't cheap, and I think here's one thing that benefits longer-term buyers is that over the course of the last month, technology has been by far the worst performing sector. As I said, it's 30% of the market cap of the S&P 500. We think that's a big opportunity. Communication services, where there's a lot of growth company, also underperform. So both of those sectors are going to show good earnings here. They're resilient to the ebb and flow of the economy. So probably if you're looking for opportunities, number one, technology, number two, communication services, because they have underperformed the S&P 500 so much here over the course of the last month that I think you need to be looking there and sticking a toe in the water, especially if you're underweight in portfolios, either of those two sectors.
All right. Well, Scott Wren, thank you so much for joining us. We appreciate your financial insight.
Thank you.